Okay, well, good morning, traders. Welcome to followmetrades.com Saturday Scanning session, where we're going to be looking for some great trades. I am Dean Jenkins, founder of followmetrades.com. I'm glad you could join me here on this Saturday morning, if it's morning where you're at. I know people are calling in from all over the world. Before we get started, make sure you can locate the chat box in the Zoom webinar platform. You should see a control bar, and there's a little raise your hand kind of icon, and next to it there's a little voice bubble thing. That's the chat panel. Yeah, I see you found the raise your hand thing. That's cool. So go ahead and click on that chat thing, and just to make sure you can find it, you can use it. Go ahead and type in, make sure you can hear me, you can see my screen okay, and tell me where you're calling in from. All good. Hey, good morning, Alex, Ashley, New Jersey, New Hampshire, New York, Ottawa, Eric, good morning. Texas, New Jersey, it's going too fast. Idaho, California, Iowa, Arizona, Baton Rouge, Edmonton, Toronto, New Jersey, San Antonio. My little sister's down in San Antonio. I love going to visit her. Chris in Australia, St. Mary's, Georgia, UK, Calgary, Texas. Texas is winning. I am in Olympia, Washington, just south of Seattle in Washington State. Good morning, everyone. Sarasota, Florida. All right, lots of people raising their hands. All right. Yeah, make sure you can locate that chat box. Beautiful East Texas, Mark. Hobart. Arturo's in Washington State. We're at in Washington. All right, Robert wants to look at GWW. We're going to look at some of your picks later on in the deal here. Silicon Valley, Catskill, New York, and there are people from all over. All right. Well, thanks, and I'm glad you guys can use the chat box because you're going to need that. I definitely want you to ask questions, make comments as we go along, and later on in the session, I'll be offering to take a look at and analyze any picks you're interested in. So you'll definitely need the chat box for that. All right, let's go ahead and get it kicked off here. So before we get started, just as always, a quick disclaimer. Hey, good morning, Miles. Hey, I'm a trader. I'm not a financial advisor. I'm going to be looking at real live markets and looking for trades that I'll be taking in my account. I'll even show you a couple of trades that I'm currently in. But whether any individual decides to place an order, make a trade, that's purely each person's decision. I'm not giving financial advice. I'm sharing what I do. Each person obviously has to make their own decisions. Only you know what's appropriate for you in your account, your tolerance for risk, all the things that go into making trading and investing decisions. And of course, it all carries risk. So I share what I do. Each person makes their own decisions about what to do. All right. Some of you I know were invited here by some of my friends. So maybe you don't really know who I am. So just a quick intro. I'm Dean Jenkins. I've been investing and trading for about 20 years. Over 20 years now. It's been a long time. It really started when I was working for Intel Corporation. I started there in '93, and I worked there for quite a number of years. And as part of our package, they gave us incentive stock options. We could buy employee stock purchase program and all that stuff. And if you remember '93, from '93 to really to the dot-com thing, if you were watching all tech stocks and Intel in particular, just up, and it certainly got my attention. Wasn't long before what we were making on stocks and options was way more than what we were making in base pay, and started trading, following, participating in the dot-com bubble. Won some, lost some in that. Along the way, I got an MBA from the University of Washington and learned how to analyze companies. And for a long time, I was a fundamental trader, and I got mixed results. It was a pretty frustrating endeavor because you have a great company with great earnings, great results, stock would tank. Why'd that happen? And you could have a kind of a terrible company, or with sketchy business prospects, and their stock would be going to the ceiling. So it got me thinking that there's more to it than just fundamentals. That probably investor sentiment and optimism and pessimism played a big role. I started getting interested in technical trading. I totally gave up on the market for a couple of years. I just went on the sideline in 2007, and it turned out that was really good luck because I got out, was in cash right before the big crash. But afterwards, I just couldn't stay out. And after the big crash, I started seeing, you know, really good, solid companies whose price had been beaten down, and it just looked like buying opportunities. And for example, I bought Bank of America at $5. It went to 12. And even in a winning trade like that, I was totally stressed out because without a trading plan and you don't really know what to do, you know, it causes stress and fear and greed and all these things come into play. And even though it was in winning, you know, you go, wow, should I get out and take my profit? But am I going to miss out on more profits? But am I going to give it away? So I really got interested in technical trading about 2010, really learning how to analyze price action and charts and use indicators. And boy, I made a lot of mistakes. I bought a lot of indicators and courses that turned out to be not so helpful. Many of you, anybody been down that road? Maybe raise your hand where, well, you just wanted the answer and it looks so legitimate. And so, yeah, I'll just go buy that, right? And it looks really cool. It's got a bunch of colors and it says buy here, and I do, and it lost money. Yeah, pretty frustrating deal, and lots of us have done that. But in about 2012, I finally settled on a really good system. Thanks for raising your hands. Yeah, we've all been there, huh? No fun. About 2012, I settled into the current system I'm using. You know, the big thing for me to turn the corner was getting a really good mentor, and that was Bennett McDowell from traderscoach.com, and through him learning risk control. I think regardless of the setups you look for, whatever indicator you use, fundamental to any trading is using risk management, money management. Got to control the losses, man. You can win a bunch, but if you're not controlling losses, one bad one can take it all out. And I'll bet some of you have had that happen too, right? And I'm in that camp. Yeah, absolutely. Mark says, mentor was who? It's Bennett McDowell from traderscoach.com. Great company, great guy. So I actually was mentored by Bennett. I ended up joining his staff for a while. I was a coach, coaching other traders once I had started getting good profits on my own account and really mastering the techniques. And then I was coaching for them. And finally, in 2015, I went out and launched my own company. Yeah, Bob, this is totally being recorded. As long as the technology works, man, we'll have it up. We'll post it and send a link out later today, a couple hours afterwards. All right, 2015, I launched followmetrades.com. So here, I'm gonna talk about my approach to trading, because before we look at charts and before I start pointing out trades, I think it's important to explain what it is I'm looking for and my overall approach. There's 1,000 or more ways to trade the markets, way different forms and approaches to trading. So I'm going to share what I'm doing. And Raganathan, I hope I pronounce your name right. No, I'm not going to cover Forex. I'm primarily a stock and option trader. I look at futures markets for direction, but I don't trade Forex currently. I can analyze pairs if you're interested later on, but I don't personally trade Forex currently. So I'm gonna explain my approach to trading. I'm gonna explain the setups I'm looking through. I'm gonna talk about my scanning technique, and then we're gonna go find some great trades. And then later, I'm gonna offer to take a look at any stocks that you're interested in, any symbols, whether it's a pair, a future, or a stock, and apply my techniques, my analysis to it, and offer my opinion if you like. Who knows? I may love some of your ideas. I often get great trades in sessions like this, something that wasn't on my radar screen, and you pointed it out. And if we have time, once I get some great trading ideas, I'll share what option contracts I like. Once I do all my analysis on the stock chart, and then I primarily trade them with options. Oh, nice, Jay. Jay was part of my service, is part of my service, and he says my SPY put call a couple of weeks ago was beautiful. Hey, we did well on that. We did well. We went short the SPY on January 31st, right after the FOMC announcement. And we took it all the way down short and made some really nice profit really, really fast. And then we managed to trade according to the techniques I'm going to be sharing with you here. And we got out right at the bottom. So it was cool. So you might want to stay with me, get the most out of this time. If you're multitasking, you're probably going to miss some valuable stuff. In my course, do I teach how to place option trades? I do have an option course. Absolutely. Absolutely. Do I think SPY is setting up again for puts? We're going to take a look at that. We're going to take a look at it, and I'll show you what I think. The short answer is I think it's at a decision point now, and I can guarantee you from here that it's going to go either up or down, right? I'll go out on a limb and make that prediction. but I'll show you what we're going to look for and how we can trade based on that once it kind of breaks out of that zone right now, and how we can try and capitalize on whatever move it ends up making. Hey, Rob, good to be here. Good to have you here. All right. My resume for trading, you know, if I'm going to, you know, present and ask you to watch me, I should be getting some good results. Here's my homepage, followmetrades.com. I believe in complete transparency. So here's the results we're getting year on year listed here, and I provide the details of every single trade. So you click on a year and it'll bring up, you know, 2017, every single trade that I took, and I published to my subscribers in 2017, you know, the good, the bad, and the ugly. So we certainly don't win every trade, but we do make solid and consistent profits. So my results are posted there on my website. And I've learned that in this industry, not everybody's doing what they say they're going to do, right? And you can see on my homepage, no Lamborghinis, no yachts, no private jets, right? We're not talking about, you know, becoming a multimillionaire in 6 weeks. It's probably not going to happen, right? We're talking about solid, consistent results. And my results are verified. Again, there's so many people making so many claims that I thought to kind of stand out and be legit. I have a third-party CPA firm who audits. I started in Q2 of last year. So every quarter, what I post on the website is trades I took. I send my brokerage statements to third-party CPA firm, and they take a look, compare what I actually did in my own account with my own money to what I'm publishing here, and provide a report on whether I actually did that or not. And I did. So I just think that's important to have some transparency, right? And to be legit. Yeah, thanks. Ranganathan, man, I hope I'm saying your name right. Thank you. Said one of the few in the industry, yeah. Okay, so let's talk about trading and my approach to the trading. I think regardless of the setups you use, regardless of the indicators you use, the instruments you trade, the time frames you trade, you got to have these three things. They're essential to all trading, and that is you got to have great trade setups. Right? You have to have an edge. You have to have a probability. You know, the probability of the outcome has to be greater than 50%. Right? So you got to have a great probability outcome, and you have to have a great reward to risk ratio, meaning the probability that the trade will make more money if it wins than it will lose if it fails on every trade, because you can win more than 50% of the time, right? But if your losers are bigger than your winners, you're still losing money, and that's not good. And the trade has to have the potential to make more. And there's some trading methods that I don't like because they may have a pretty high win ratio, 70, 80%, but their reward to risk ratio is terrible. And you can win 5 or 6 or 7 trades, and then the loser wipes it all out. And that's really discouraging because I'm personally, I'm not trading to lose money. I'm not sure about you. I think you're probably the same, right? I'm doing this to make some money, to make profit. So you got to have great trade setups. You got to have high probability outcomes, great reward to risk ratio. You got to control risk, man. You got to control the downside. And you have to have a predetermined black and white rules-based system for managing the trades once you're in it, because if you don't, it's going to cause stress and frustration and bad decision making, right? Because emotions take over. If the course has not been plotted ahead of time, you're going to make decisions based on emotion, and they're probably going to be the wrong decisions. They are for me. Right? I shared that Bank of America trade. Niraj is saying on options, it's hard to determine the risk to rewards. We don't know how much the option may fall due to implied volatility. Depends on your approach to options. And when I show my approach to charts here, we absolutely can determine the potential reward to risk on our trades, including options, and we can absolutely define our risk and control our risk on our option trades. But there's thousands of option strategies. I'll share what mine is. All right, so let's talk about casinos for a minute. So here's these people playing craps, and they're smiling, they're having a great time throwing the dice. Looks like there's alcohol involved, and they're having fun, right? But they're gambling. They are not, if they have an expectation that they're going to walk out of the casino net winners, then they're in for a surprise. They may get lucky, right? But they shouldn't have an expectation that they're going to walk out of there as a net winner. Why? Because the deck is stacked against them. Right? They are gambling. And you know, a healthy approach to visiting a casino is that it's entertainment. And if you'd spend $100 on dinner and movie, maybe you'd spend $100 at the casino with the chance of getting lucky and winning some money, or at least go have fun, like they're having fun here, right? But the casino owners, they are not gamblers, right? There's some serious people upstairs with green eye shades looking at the cameras, counting the money, and they are not gambling, right? They are in business, and they are they have an edge, and they control two key variables in what goes on the gaming floor. They control probability and they control risk, right? Just consider a roulette game. There's several games on any given pit, but roulette is a simple game, right? It's so brain dead simple, right? It's a wheel, you spin it, it's got numbers 1 through 36, half the numbers are black, half the numbers are red, so there's even odds, 50-50 chance of being red or black, even or odd, and it's got a 1-to-1 payout. So if you bet $10, and you don't get it, you lose $10. If you win, you get $20 back, right? A $10 gain. So look at a roulette wheel here, and you go, okay, I see it 1 through 36, black and white, but wait a minute, what are those green spots? What's up with that? That's something different. We got a green 0 and a green 00. This is American style roulette wheel. They changed the odds from 50-50 to a 47.5 win probability per spin for the player. The casino makes all their profit on roulette on that 2.5% edge. They will win 52.5% of the time, and over thousands of spins, they're going to win 2.5% more time than they lose. And that is enough. They make a ton of money off of that. Okay, they control and ensure profit by controlling two mechanisms: ensuring a probability edge, which is with the green spots, right? They just tilt that thing a little bit in their favor, and they control risk. So the probability is controlled via the two green spots. Risk is controlled via a table limit. So different casinos, different pits have different limits. You can't walk in and bet $1 million on the black spot, because you got a 47.5% chance of winning, and they'd have to pay out $1 million, and that would be a big setback, and they're not going to let that happen. So they control probability by sticking 000 green spots in there, and they control risk versus a table limit. They go, this is the max that we're willing to lose, and you know, 100, 200 bucks on a bet. Why not be the house in our trading? Why not be the folks upstairs with the green eye shades, knowing that over thousands of spins or over dozens and hundreds of trades, we're going to win. We're going to lose some, but the loss is controlled, and we're going to win more than we lose. And we can even do something that the casinos can't do through reward to risk ratios on our trade setups. Because the casino on roulette, it's 1-to-1 payout, right? If you bet 10, you're going to lose 10 or win 10, right? Imagine if the casino said, well, you bet 10, but if you lose, you got to pay 20. You got to pay us another 10. Well, nobody would play the game, right? Nobody would play the game. But we can do that in our trading. We can make sure that if we win more than we lose if it fails. So I think to be a consistently profitable trader, again, just to reiterate this, you need great trade setups. You need a high probability outcome, just like the casinos, right? Probability on your side, and you need a great reward to risk ratio. So I use two things in my setups. I use Ichimoku Cloud, and I combine it with Elliott Wave. Very simple, repeatable form of Elliott Wave. Right? A lot of people have heard of Elliott Wave, and they roll their eyes, and it's, wow, it's complicated. And many approaches are. We keep it painfully simple how we approach Elliott Wave, and we use Ichimoku Cloud, again, a very simple form of Ichimoku Cloud, simply to confirm that a trend has begun, we are still in a trend, and the trend has changed. It's a powerful tool for that. Here's Elliott Wave. You know, I only have 3 trade setups. I'm looking to trade this impulsive first move, which is wave 3. If there's enough profit, I'll trade a correction after an impulsive move, wave 4. And then after an impulsive move and a correction, 2 Fibonacci levels, I'll try to trade the continuation of the original trade. Don't trade the early waves, don't trade the ABC correction afterwards. 3 trade setups. Wave, initial impulsive move, a correction, a continuation. That's all I'm interested in. Works on bull markets, works on bear markets. Let me show you a setup on a real chart, on a real trade that we just took. So this is gold on a 60-minute chart, gold futures continuous contract. Well, here's that shape that I'm looking for. I love this because gold from December all the way through January, right, had a big impulsive move. That is a Fibonacci wave, or sorry, Elliott wave 3. Doesn't need to be overly complicated. You just need to look for a big impulsive move, right? It's there and it's unmistakable. There was a correction. I can measure whether that correction did what I expect by just going from the beginning of that trend to the end of it. And I look for a retracement into a Fibonacci retracement zone. It's these 2 blue lines. This is Fibonacci 38.2 to 61.8. That's where we expect most corrections to go, and then end. Right? So it did it perfectly. And it's got an uptrend and a series of higher highs, higher lows, higher highs, higher lows. Trend changed. The Ichimoku cloud confirmed it. Wow, we got a correction beginning. We got lower lows, lower highs, lower lows, lower highs into the correction zone. So we wait and we go, well, if we had a wave 3 up and a correction, we expect there to be a wave 5 at some point. We just wait for evidence. Higher high, higher low, higher high. Look at that. We broke through the Ichimoku cloud. So the cloud confirmed it. And now we can use Fibonacci extensions to predict with probability where that wave 5 thing will extend to. And it's going to extend between 61.8 and 100% Fibonacci extension. So I took this trade. We saw it setting up. I waited for the FOMC announcement last week because we knew they were going to be talking about, we waited for the CPI number last week. We knew CPI was coming out, and we knew it could be disruptive. It had a big, big wick here, but then this trend continued. We went ahead and took this trade. Yeah, that white line is a 200 simple moving average. On a 60-minute chart, I don't care so much about it. On daily charts, that's probably the most watched indicator, and because thousands, hundreds of thousands of traders are watching it, it can be an important support or resistance area. So I watch the 200 on daily charts. So anyway, we took this gold trade, and I don't trade futures, and I'm not a day trader. I intend to be in trades. This is a shorter term trade. We're taking it on a 60-minute chart. So I expect to be in it 3 or 4 days to a couple of weeks. And so we took it. We got long on GLD. We traded the ETF. We used the futures for the analysis because that trades around the clock and it's got a little better resolution, but we actually took the trade on GLD. We got in at 125.48. Here we are up at 127.95. This red dashed line is my stop loss level. This green dashed line is my target. I set my target at the lower edge of the target zone because I want to be conservative. My initial target was down here. My initial stop was down here at the low. We've trailed our stop up as price puts in a higher high, higher low, new high. So my initial stop was here. And if you can picture this price level compared to the entry, look at that distance there, and then look at the distance from my entry to my target. Well, this is like 5 or 6 times this distance. That's what I mean by the trade having an initial reward to risk ratio that's in my favor. Because if it had gone down, if the trade had failed, then any trade can fail. The outcome of any trade is unknown until it's closed. Right? But if it had gone down and failed, the amount I would lose would be dramatically, proportionately smaller than the amount I would win if I get up to my target or beyond. That's putting reward to risk in my favor. I've got probability on my side because I know after thousands of trades that if I got a setup like this with a good initial move, a pullback, 2 Fibonacci levels, and then clear evidence of the continuation beginning, I know there is a high probability of this winning. Not a certainty, but a high probability. And I know that if it wins, I'm going to win a lot more than I will lose if it fails. So is this trade still viable? Ahmad is asking. Well, it's an easy question to answer, because if we were to take an entry at current price, so that, current price, let's say, is 127.93. The current stop, I'm going to have to expand my my scale so we can see it. Current stop is 125.28, and the target is 131.93. So we can see just visually, right, that we're getting close. We're at about a 1.2 to 1 reward to risk ratio. So the answer is yeah, you can still take it, but not for much longer, and it doesn't have anywhere near the excitement and potential that it did initially. Now, I'm going to be trailing this stop up on Monday, and then that may change, and then the parameters may change again as we move the stop. So, it's dynamic, but at this snapshot moment in time, yeah, it's still good. It's not, doesn't have nearly the exciting reward to risk ratio that it did initially. All right, and we talked about options earlier. So on this GLD trade, I'm trading it with a call option. I know lots of people like spreads and creatures that fly and all this kind of stuff. I'm a simple guy, and I keep it absolutely simple when I trade with options. We got a directional trade, right? A directional trade here. We think it's going up. The most profitable and the lowest risk strategy for that, regardless of what you may hear differently, the highest reward, lowest risk strategy is simply to buy calls. And I know there's, I'm on everybody's email list, and I get all the invitations to webinars that say, don't ever buy options, right? Because you'll get killed with the time decay and the implied volatility. Well, if you do it wrong, those are true statements, but we do it right. No market Monday. Good point, Tom. It's closed for President's Day. We'll be here Tuesday. Okay. So if you're halfway smart, right? If you're halfway smart, you buy options with the intention of it increasing in value, right? A call option, if we buy it when price is down here and price goes up to here, the value of the option is going to increase dramatically if you buy the right contract, and if you buy it deep in the money with a high delta, right? If you buy it we bought the gold things at 875, right? If we make it to the target, they're going to nearly double. They're going to nearly double. That's a pretty good profit, right? That's a pretty good profit, 100%. If the trade fails, and if underlying shares go down here and hit the stop, we're simply going to close the position. And I'm trading this with May. I'm trading this with May 121 strike call options. I like a delta of at least 70 or above. In the 80s is better. Right? Ranganathan's using spreads only to be able to afford getting in on ATM price. It works. You pay less money, but your profit on a spread is capped. Your profit on a spread is capped at the credit you received up front. That's the most you're ever going to make, right? And if things really come undone, you could lose more. You could lose a lot more, right? It's the reality. Yeah, there's cheaper options out there. We bought a deep in the money USO call for 128 bucks a contract. So just being cheaper isn't necessarily a good reason for a bad strategy, right? I know a lot of people like spreads, and there's good ways to do them. I don't like the fact that the profit is capped, right? And the notion that, well, you're going to have time decay and it's going to eat into your profit is hogwash. It is if you hold the stupid thing to expiration. I've got a May contract here. I'm in this trade for 3 to 4 days to a week or two. It's not going to expire. I'm going to be closing it. And by the way, it's a 121 strike. I got in at 125. I'm $4 in the money. So the time value and the implied volatility value is about that much of the total option contract. The real value of the option contract is based on the amount it's in the money. It's called intrinsic value. So if time value shrinks a little bit, I don't care because the thing's going to increase by about $8 at the profit. There we go, Anthony. Limited risk, unlimited reward. And I control risk on options by simply only buying, if the amount that I would be willing to lose, and I'm not going to lose it all, right? There we go. Open interest, Gary. I do want to make sure there is a viable option market. Absolutely, I want to make sure there's a liquid market. So, so when we take the trade, that I can get in with a good price. But even more importantly, when I want to get out, there's a buyer. Right? There's a buyer, and the bid-ask spread isn't too crazy. Yeah. Femi George, yes, I'm recording this, and as long as the technology holds up, we will be sending the link out. We're long USO, matter of fact. All right, where was I in the presentation? It was a good discussion. I used Dow theory. Uptrends are higher highs, higher lows. Downtrends are lower lows or highs. I use that to confirm it. Trend ends when the pattern's broken, either direction. Okay, so again, to be a consistently profitable, not winning occasionally, but consistently profitable trader, I think these are essential. We talked about great trade setups. We just covered that. You need risk management. You've got to control the downside. What happens if the trade fails? We have to assume that, we have to believe that the trade could fail, because it absolutely could. So I think it's important to determine upfront, before we take the trade, how much are you willing to lose? If the trade goes sideways or down or against you, how much are you willing to lose? And that has to be a pain-free level, an amount that will not be a setback, will not cause emotional distress and cause you to start, making bad choices. I use 2% of my account. So on every trade, I accept that I could lose 2%, and I base my trade size, my position size, on that. So I know a lot of people I answer a lot of questions about, well, what percent stop loss do you use, or what absolute dollar value price stop loss do you use? I think that's a backwards approach, right? Because if you go, well, if it goes down 5%, I'm going to get out. That's my stop. 5% could be absolutely within the average true range of price movement for that instrument, and you'd be getting stopped out when it's just doing what it normally does, right? Well, that'd be a bad idea. So I base my stops on the reality of price movement on the chart, primarily using Dow theory. So I started with my stop down here, and then we had a high, higher low, new high. I trail it to here. We had this big move. We're pulling back. If it goes up to a new high, I'm going to trail my stop to here. These are legitimate, reality-based support and resistance levels on the chart. So that's where I place my stop. So I figure out where the stop goes. Then I go figure out the position size, and it's third grade arithmetic, and that is 2% of my account. So if it's a $100,000 account, that's $2,000. I divide the loss per share, difference between the stop and the entry, into 2,000, and it tells me how many shares to buy. That's pretty simple. Chris says lost the feed. Everybody else? Everybody else okay? It's all good. Okay, good. A couple questions here. Any brokers that I know with real-time data, I guess, but demo. Yeah, I'm on TradeStation. You can absolutely switch over to your simulated mode and trade demo with monopoly money, with real data, real indicators. Thinkorswim does the same thing. Ninja does the same thing. Do I put stop, loss, profit, scale points in the Black Brokers platform? Yeah, I put them right here. I actually mark them up on my chart. So when I pull the chart up, my entry is this light blue line, my stop is the red line, my target's the green line. So I pull a chart up, I can instantly see where I'm at with the trade. And I also put it here on radar screen. It's this table. I put the quantity in here, and I set alerts at my stop. So I get a pop-up and a text message and stuff when I hit my stops. Don't want to be surprised. All good. I think TradeStation has an issue with Canada, but Thinkorswim is awesome. Aren't there websites that give live quotes on options in real time? Maybe CBOE or others. I haven't looked into it because I'm using my platform. Okay, so risk control. You gotta determine how much you're willing to lose on the trade. Not how much you want to lose, but how much you're willing to lose. And you have to have your head in the place. You go, it could happen, man. I could lose this money, and it has to be in a level you can deal with. Because if you don't, you're gonna, you go into the trade, you go, it's gonna work out. And, or if it goes down a little bit, I'll get out. If you don't have a plan, a predetermined stop loss level based on some kind of legitimate methodology, you're going to get in the trade and it's going to be all then driven by emotion, and you're probably going to make bad choices. Like I would if I didn't have a plan, right? If it's all kind of seat of the pants, not going to be good. And what happens is on losing trades, you get into it, it goes down a little bit, when you don't have a stop, you go, well, does it come back? And it goes down a little bit more, and you go, well, I think it'll come back. And it goes down some more, and you go, oh, goes down some more, and you go, I can't close this trade. I can't book that loss. That's too big. Now you're stuck, right? And now you have remorse and regret and guilt and all these negative feelings, and I'm never going to let this. Trade a plan. Have a plan. Plan the trade the plan, right? Absolutely. What about gaps? They can go the wrong way. Absolutely, it can happen. You can gap through your stop. If it happens, get out. Don't wait for it to come back. It could come back. It could get worse. Being worse is worse than coming back. The gaps through it, just, take your lumps, get out. That's why trading with options, you get protected from those gaps, right? I have never lost 100% on an option trade. Never. Never will. All right, you got to have trade management plan. Once you're in the trade, you got to have kind of a roadmap. What you're going to do. You can get into a great setup. You can have great risk management. You can still lose money if you don't trade the thing the right way. A great trade management means taking profit at the right times, adding to the position strategically, staying with a winner for as long as possible, exiting the trade at the right time. This note, staying with the winner as long as possible. The statistics of trading are super interesting. Right? If you're a 50-60% trader, meaning you win about half your trades, between 50 and 60%, you can be wildly profitable. Only if you do this, right? Only if your winners are, on average, substantially larger than your losers, like at least about 2 to 1. So if you lose an average of $500 on a losing trade, you need to be winning an average of about $1,000 on a winning trade. And there's some variance. It could be between 500 and 3,000, but the average is what matters over time. Your average winners have to be at least about 2 times your average losers. If you do that, you can be a 50% trader and be wildly profitable. Okay, but you will never be a consistently profitable trader if you get into a winning trade and it pops up a little bit and you take your profit and go home and you close it, right? Because the losers are probably going to go to the stops and be full-size losers. And so what you've done is completely undermine your trading statistics, and you've actually made it so your winners are equal to or smaller than your losers, right? I know it's tempting. It takes such discipline that once you get into a trade and it's a winner, to stay with it. But that is one of the absolute keys to consistent profitability. So here I'm in this GLD trade, right? We're in profit. We got in here at 125.48. We've jumped up. Now I'm going to take some profit when it crosses this Fibonacci line at 38.2, and it may pull back and I have to sit, and then this price moves in higher highs, higher lows, higher. It doesn't go straight up. It'd be awesome if it did, right? I'll take 1/3 of the position off, but I'm going to let the rest run, okay? But we got to let it run. And the truth is, it could fail. It could go from here down to the stop, and what was a winning trade turned into a losing trade. It happens, right? Not very often. Once it starts to go, it's probably going to go. We have to be willing to let that happen, because most of them are going to go up into the target zone or beyond, and those are the ones that are going to tilt our P&L to our advantage. Got to have big winners. Your average win has to be substantially larger than your average loss. So I'm lecturing a bit, but it's so important. You can disagree with me. We can argue about it, but I think it's pretty common sense when you think about it. Why 1/3? It's really a question of reducing risk, locking in profits, but having enough to keep running to have a meaningful outcome at the end. Anthony's asking, he said, Mr. J. Well, thank you. My father's Mr. J. I'm Dean. Do I trade alongside you? Yeah, I absolutely do. So I'll talk about my service at the end if you're interested. And I am with you with my money, lockstep, right? From entry to trade closing and all the steps in between. Absolutely. Do I have a standard plan for how much movement from where I would take my first profit? I like using Fibonacci lines. They're key areas that we want to go ahead and take profit at. If we're deep in profit and we get a sharp reversal, right, I'll go ahead and take a profit there. And deep in profit is you know, a little bit subjective, but a sharp reversal is not. Okay. Yeah, Ron is asking, if you're only trading with one contract, yeah, you stay with it. If you've only got one and you can't, you know, reduce a portion of the trade, go ahead and just stay with it. Yep. If ATR becomes 2 or 3x after you enter, do I loosen stops? Nope. I follow the reality of price movement, and that changing price movement will be reflected in price. So I just use support and resistance levels and trail my stops according to the reality of what's happening on the chart, like this, right? As higher highs and higher lows are put in, I just trail my stop up. And you're not going to catch the top of a trend, but what you will do is get stopped out when the trend changes. And then, you know, this is a Vail, great mining company. We took this trade as a real trade, right? And rode it up, got stopped out, waited for the correction. Here it goes again, continuation. Just like this gold trade, right? And we just take an initial stop, trail it as higher highs and higher lows are put in. That's how we do it. Danny, yeah, this is recorded. Yeah, it's recorded, and I'll send it out to everybody who registered, assuming the technology works, nothing gets corrupted or fails. Just when we depend on technology, it lets us down. Factor I use to set stops is support and resistance levels. Higher highs, higher lows. Let me go back to this slide. So Dow theory, higher highs, higher lows, higher highs, higher lows. Trend ends when it takes out a previous higher low. So I put my stops at these higher lows in an uptrend and lower highs in a downtrend. Can I trail a stop using options? Absolutely. But I do all my decision making on the chart, on the underlying shares. And so if the underlying shares hit my stop, which is at a legitimate stop and option or resistance or support level, then I go close the option position. I don't make exit decisions on options based on the option price, but on the underlying price. And I've controlled my risk with the option by only having a far out in time, deep in the money, high delta, and I only spend the appropriate portion of my account on the option. That's how I control risk. The option may go down 50% as price does its thing. That's immaterial, right? Because if it wins, it's going to go up 200%. So it's not the percent loss of the option, it's how much of the loss if it fails, what percent of my account is that? That's what we care about. How far out in time do I go? I want to be out of the trade before, I don't want to be in the contract for the last 30 days of the contract. So depends on the time frame I'm trading. If I'm on a daily chart, then I'm going to be looking at about a 90-day option contract. If I'm trading on a 60-minute chart, I want to be at, 60 to 45 is okay, right? I want to be out of the contract before it gets into the last 30 days because the time value does tank. Now, the time value in the contracts I trade is this much, and the intrinsic value is this much. So time has very little effect on it, but I don't want to be forced out if the thing's going to expire, right? I want to get out of that contract. I want to have its price go sky high and then sell it, take my profit. That's the option strategy. A couple people asked about guitars on the wall. Yeah, I play bass and a little bit of guitar. I got to play acoustic guitar this tomorrow, and I'm being stretched, and now I got to go spend a little time in the woodshed and get ready for that. I haven't done that in 6 months. Mark says knows nothing about option trading, only been studying futures with Rinko bars. Will you be able to apply it? I'm not sure. I don't know enough about what you're doing, Mark. I can't answer that completely. Rob plays all the keyboard instruments. Nice. I want to play keyboard. I want to be like a synth player, man. All that cool sounds. That'd be awesome. Okay, hey, we were going to be looking for some trades. So here's how I go about finding good trades. Man, we spent a lot of time. You guys have great questions. The indicator in the lower pane, we'll talk about that. It's a price oscillator. I use it for momentum. So here's how I go looking for trades. I create first. Just go, what big picture, man? What's going on in the market? What's coming up? What's happened? Then I create a thesis about what I think is going to happen, and based on that thesis, then I narrow my list down to a manageable list. Then I go looking for great trade setups. Right. I have it in mind. I've already kind of showed you what I'm looking for, and I go scanning for trades. So I'm gonna go do this real quick. I'm gonna go find some trades. That's what we're here for. Right? After all that. So what happened over the last week or two? Well, we had some incredible volatility in the market, to the extent that some VIX ETFs got shut down. But let's look at the S&P 500. And again, this indicator on the lower pane here is called the optimum wave locator. It's a price oscillator. I use it for confirmation of momentum and trend change, and to check for divergence. So here's the S&P 500, and as you may have noticed, at the beginning of February, we had a pretty dramatic drop. People who were in my pick service and trading room capitalized on that. We went short on the 31st, took it all the way down, made some really nice fast profit. But it took two trades. One down, after the correction, we took it down again. So we had this huge drop and a pretty good recovery, right? In fact, they said the biggest 1 week gain since about 2011. It's pretty remarkable, given the bull market we've been in. Ooh, Anthony went long and lost half his account, he said. Dude, I can help, right? Did the idea of risk control, as I was talking about it earlier, did that capture your attention, Anthony? Yeah, we've all been there, man. We've all been there. Using the, Rob, how did I assess that short before it happened? Using the rules that I'm going to be looking for trades here. We did it on a shorter time frame. But the big picture here is we've had incredible volatility. And what I know from watching several stocks and watching the news and other discussions, here's the NASDAQ. Come on. Here's the NASDAQ. It did pretty much the same thing. This is QQQ. But a lot of the technology stocks had a dramatically worse response than the indexes, and some of them were unaffected or affected in a proportionately smaller way. And so my thesis, based on this big picture review, based on that information, is I think there may be some good trades in strength going long in the NASDAQ for companies that did not experience the same drop that the rest of the market did. And I think there may be some shorting opportunities for those who showed incredible weakness and dropped more than the market did. That's my thesis, right? Big market volatility in the NASDAQ. I think there are some long opportunities for strong companies, some short opportunities for some weaker companies. So I'm going to go look at the NASDAQ 100, the top 100 biggest names in the NASDAQ, and I've loaded them here into radar screen. And what I'm going to do, if you notice, if you're on my chart, I've got the 200 simple moving average. It's a really big indicator that so many people watch, and on the S&P, it absolutely predicted support currently. And by the way, I said I would give my prediction on the S&P 500. Let me do that real quick. Chris, I see your comment. Tech stocks tend to be strong January, February following CES. Those are the kind of things that catch my attention and make me go, look, they can be the basis of a thesis. But I'm not going to trade based on that. I'm going to trade based on the patterns on the chart. So look how the S&P 500 came right down to the 200, and it provided pretty good support, and it's gone up into the Ichimoku cloud. That's the shaded area. It is at a key decision point. The Ichimoku cloud predicts support and resistance. So if it blows through that, if it blows through resistance, we're probably going on to new highs. We're in the cloud right now. If it reverses and goes down below, we're probably going down again. And if it goes below the 200 simple moving average, the big one's on. All right, I'll go on. I'll make a prediction. If we get below the 200 simple moving average on the S&P 500, it's time to shift to a weekly chart and start looking at a big correction down into the 1800 range. It's my comment is exactly the same for QQQ and the Dow, Anthony. It's not a gut reaction. It's technical analysis. Tom's asking, do I trade options using TradeStation's option platform? Yeah, it's called Option Pro or Option Station Pro. Yes, is the answer. I do trade on that. Best brokers to be with under which financial jurisdiction safety, how we start. You know, best broker, it depends. If you want to be able to do it, if you want to be a technical trader and do your own chart analysis like I am projecting here with indicators and stuff, I think the top two are TradeStation and Thinkorswim. If you simply want to be able to place orders and you don't care about doing your own analysis, you're going to follow a service like mine and you just want to place orders, Charles Schwab, TD Ameritrade, Vanguard, all top flight. Do I use the default setting on each Ichimoku cloud? Nope, I use proprietary settings, and you can see I've turned off the Chiku, the Tenkan, all that stuff. I'm just concerned with the cloud, and I use proprietary settings on that, which I offer in a course on that. There. And for Canada, Rob says it's TOS. Yeah, I think, yeah, or he's not stating, he's asking. I think there's probably some Canadians on today who are using Thinkorswim, maybe chime in. Does Schwab have decent analysis tools? They have a lot of fundamental screening tools. They do not have good charting capabilities. Can't use TOS in Canada. So what's the big platform in Canada? TC 2000, okay. I think the company has to physically have an office in Canada in order to have their platform running there to do their thing. I don't know why they don't just, you know, go rent a 100 square foot office. Okay. Hey, Arturo, well, we're going to scan now. We'll get to it. So here we go. NASDAQ 100 is my target area for today, based on the reasons I gave earlier. And so what I'm doing, I've got a custom indicator I wrote here where I'm looking at the 200 SMA, and I want to know how many, is it above it or below it, and how many days has it been since it crossed? Because I'd like to get new trades where they've recently crossed the 200. That can be an important indication of a new trend. And I want to know how far from the 200 price has moved, and I'm also looking at Ichimoku cloud. If I'm going to go short, right, this is a conflicting signal. Price is above the 200 SMA, but it's got a trend direction of down on the Ichimoku cloud. Right? If you look at Avgo, Broadcom, it is below the 200 and it's down. So those are in agreement. So those are the kind of things. Yeah, Anthony, definitely I share that kind of stuff when you sign up. Okay, so let's look at some of these that are, I've got this sorted here based on bars since cross, right? I've got the smallest ones, okay? So for a new trend, that's gonna be interesting. So what I'm gonna do, I've got this link to my chart, and I'm gonna switch this, and we're just gonna start looking at the ones that have good potential. And the first one up was Broadcom, Avgo. I use a variety of time frames, Robert. I'm on a daily time frame right here, and you know, like intraday, I look at a 10-minute, for, you know, I'm not trading intraday on a 10-minute, but for, you know, shorter time frame trades, you saw me looking earlier at 60-minute, 10-minute sometimes. My cursor has changed into a strange block on the charts, no longer an arrow. Really? Everybody else seeing that? Plus for the hand, that's what it should be. There we go. Still on weekly. Thank you. You saved my bacon. Okay, so Avgo, Broadcom. This is a super interesting pattern. Check this out. What do we see? Big impulsive move up, right? It was in a beautiful trend, an amazing company, amazing chart. But it has done, when's the last time Avgo was below the 200? It was way back at the beginning of this trend in early 2016. It's been above the 200 ever since then. Well, we had the overall market crash, and proportionately, Avgo had a big move. They've rebounded, but look, they broke the 200, which previously had been support. And there's a good chance that that support has now become resistance. We are below the 200, we're below the Ichimoku cloud, and we are doing what? We are putting in, change colors here, I'm going to draw. We're putting in lower lows, lower highs, lower lows, lower highs. That's the dictionary definition of a downtrend. Probably a lot of people who would call me silly for being bearish on Avgo, on Broadcom, but I'm just reading the chart, man. I don't really care how wonderful a company they are. Sentiment has changed, right? If we get another reversal, clear signs, a couple down bars here, that prove that this 200 was indeed resistance, right? If we see increasing downward momentum in the price oscillator, I'm going short Broadcom. Look at this. This is part of what I use the price oscillator for. Even as the uptrend continued, bullish momentum was decreasing, bearish momentum was increasing. And look at the increase in bearish momentum. This is good. That's as big as it gets. I'm full screen on the chart. I don't know if you're on a phone or a tablet or something there, Z. I think most people can see it okay. I don't use volume as an indicator. I tried so hard. I thought volume was going to be the coolest thing and the most predictive thing ever. It's not. It's not. I care about volume in terms of a liquid market, a deep market. In terms of volume changes as an indicator, I could never make it. I could never make the correlation. I know you'll see presenters talk about it. Hats off to them if they got something that's working there. I don't use it. Okay, so Avgo is a nice short candidate. Not quite ready yet. And most of my trades are going to be like that. We're waiting for a, I mean, it's really rare to come, oh, wow, it is the perfect setup right now. We wait for something to qualify. That gold trade I showed at the beginning of the session, right? I don't know, a lot of my trading room people are here. How long? We waited a month. Right? We waited a month for that gold trade to qualify. We got it now. It's a rock and roll trade. So we may have to wait. Avgo may go up, penetrate the cloud, go on a new high. So I won't short it, right? No harm, no foul, no money lost. If it reverses pretty sharply from here, I'm going short. So there we go. That wasn't bad. First one we looked at. So again, I'm looking at this radar screen and I'm just scanning for, so this is above the SMA, it's above the cloud. We got some conflicting signals here though. MLDZ, price line, ADI is above, down, below. Lamb Research, above, so we got conflict. I don't like conflict. This is all above. So these could be the strong players here. Let's go, above, below, below, above. I never heard of this company. Discovery, calm. Okay. Yeah, I don't like the pattern. What we got here is a big wave 3 down. We got a wave 4 correction. The wave count indicates more lows to come, but it's broken up above the 200 with a potential support area. So everything's in conflict there. So I don't like it. Took me about 30 seconds to figure that out. That's what I teach in my courses. Trip, we're above. So this is probably TripAdvisor. You know what? I like this. What minimum open interest am I comfortable with? It's not based on one particular contract, but is there a viable market? And across, if I look at a particular expiration date, I want to see at least a couple 100, 200 contracts. The more, the better, right? If it's 20 contracts open, for the whole month of April or something, that's probably not enough. Yes, Peter, in the courses I do show how to set up the screen. So what's up with TripAdvisor here is this big move down, right? A little sloppy, but thing likes to gap. But it looks like they have put in a pretty solid bottom after an incredibly long time of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? It's turned. It changed, right? Higher high, higher low, higher high, higher low, above the 200. Found support at the 200, previously resistance, now support. Little gap up. I wouldn't mind an entry here. My target would be here. Now, the scale is huge because of that big move, but if we blow this up, right, if we take an entry at 43 bucks, we got a target, and I'm just setting it at the bottom of that previous gap, right at the Fibonacci retracement zone up at 55.70. That ain't bad. This one's a fasten your seatbelt kind of instrument. I might take a little smaller position because of its volatility, but that thing's got a good probability is on our side for this thing going. Look at the growing momentum in this. So let's keep our eyes on Trip. That may be one I take next week, not Monday because it's a holiday. Did good on earnings, yeah. And maybe there's some good news finally coming in and some sentiment changing on this. Well, this is fun. What else we got here? American Airlines is above, it's below, so we got a conflict there. Apple, of course we got to look at Apple. Can't have a webinar without looking at Apple. So Apple dropped pretty dramatically with the rest of the market, and then it went below the 200, then went back up above it, and it's getting ready to penetrate the cloud. It's sitting there pretty much where the QQQs are, right? Same thing, it's in this decision point. If it breaks the cloud, probably new highs. If it fails, it's probably going back down. It's at a critical decision point like the rest of the overall market. The QQQ, SPY, Dow, everything is sitting at that same place. Just is what it is. Wow, it's got windy and rainy. A bunch of sheet of rain hit the window. Did I mention I live near Seattle? It occasionally rains here. Let's see. Applied material above, and it's in. Is that it? Yeah, let's look at it. This you could take the label off, and this could be QQQ or Apple or anything else. They're all the same. Let's look for something different. Amgen is above. Tesla. So it's below the SMA. It's got a downtrend. It's above the cloud. Yeah, Microsoft. We'll look at Microsoft. I'm actually bullish, not just because they're from Washington. So Tesla, look here. So it wicked above the 200. Look how it's putting in new low here. It's pretty volatile, right? But it put in a new low in the downturn in the pullback of the overall market, and it's sitting here up against the 200. If it breaks the cloud here at about 325, I'll be interested in shorting Tesla. Yes, sir. Anthony trades Apple and Microsoft almost daily, so you kind of day trading them. You know, they're big deals. So here's an example. My original thesis, I said there were some companies that did not go down as much as the overall market, right? They did not show anything close to the weakness of the overall market. Here's Microsoft, right? They did not have a 10% drop like the overall market did. And they didn't even penetrate the cloud. They got nowhere close to their 200, and now they're heading back up above all support levels. MSFT is a long. Chris, does the 200 intersecting the cloud indicate a highly volatile stock with no strong trend? No, I haven't seen that relationship. Okay. Yeah, let's go look at a few years. Let's go look at, if you got symbols you want to look at, I probably won't be able to get to all of them, but we'll start with Alibaba there for Ashan. Asan. Oh my goodness, Joe types in about 10 symbols. I'll catch a couple. Alibaba is at the exact same place that the indexes are at. Big drop down. It did not hit the 200, interestingly. If it pops above the cloud, probably going to more highs. Not really ready for that yet. Okay. Oh, interesting, Chris. Joe, let me just catch your first one there. VFC. So I don't recognize that. I'm always interested in new stuff. So it is VF Corp. So big, huge, impressive trend. Made it to almost $85. Now it's something, of course, went badly wrong. It's down 10% on Friday below the cloud. I would wait and see if sometimes these gaps get filled. And so if it finds some kind of resistance and reverses again at the cloud, there may be a shortcoming, but it's early for that. It wouldn't go long, and it may be too early to go short on VFC there, Joe. MRK from Gary. That Merck? Boy, Merck is a sloppy, messy chart. It's so volatile. Huge drop before, recovered. Of course, with the rest of the market, it dropped again. I think it's just going to keep doing this. There's no clear pattern, no clear. It's not an orderly market that we can have a probability on our side. So for that reason, I wouldn't try to do it, Gary. Halliburton. We were in Halliburton and we made some profit on it, and then we closed that trade, and a good thing. So we got into Halliburton here at 47.45 based on this pattern. Nice impulsive move, perfect correction, clear evidence of the next move beginning. It actually made it right to our target zone, right? We got in here, we took profit up here, we had trailed our stop just like I taught earlier here. Trend turn, we got out here before all this nastiness happened. Perfect. Love it when that happens. So now it is at a key decision point. It's at the bottom of the cloud. At the 200, is it going to find support and go up one more run? Don't know. If it does, there could be another long here. If it breaks down any further through the 200, that is all over. So good. Glad we looked at Halliburton. GE. Man, one of these days on GE, huh? How low can it go? It just won't quit. It just won't quit. You keep looking for a hard surface for that dead cat to bounce off of, and it ain't finding it yet. If it ever does, there may be a good trade up. The problem, as I understand it, read a couple articles, that even breaking GE up and selling off assets, even at the current price, the market cap of the company is more than the value of their combined assets. That's a bad deal. That's pretty rare, actually, in a conglomerate. So we'll have to watch and see. It's fallen so dramatically. There's no signs of it ending yet. COP. Man, yeah, maybe. It's got a nice uptrend. It went down with the rest of the market. It stayed above the 200. It broke the cloud a little bit. Really couldn't justify any longs to at least get up above the cloud at about 57.77. COF. I don't think I'm gonna. I know for a fact I won't be able to get through all the questions. You guys are awesome, but sorry. COF. Cap one for that. Well, that looks exactly like the same last chart. It's the same comment. Same comment. It found support. It's breaking up. You got to get above this cloud though, which could be resistance before you try to jump in on that one. Maxim. Here's an example of a company that did not suffer the pullback the way the rest of the market did, and it's real strength, just like Microsoft. It's above all. It never even got close to support. It did hit the cloud a couple times. That it's been a long trend, so you don't know when it's going to end. Previous high up here. So Maxim, you could go long on right now. I wouldn't have a problem with that. That's for Anthony. ITT for GB. This looks like the rest of the market. Big drop, recovery into the cloud. It's got to break either way, and that'll tell you where it's going. What's the green-red indicator at the bottom of your scanner screen? So on here, this is the price oscillator. It's called the optimum wave locator. It's a price oscillator I use for momentum measurement. Recommended WLL a few days back. What's the prognosis now? WLL, it's been a few weeks, over a month actually, and never qualified. So we never, trying to recall, I don't think we ever got in. If we did get in, maybe we did. It was a quick, short, limited loss on WLL. Why would I short? I think you're saying VFC. The lower indicator is showing green, VFC. I said I would wait, right? I said we had a 10% drop on Friday. I would see if it went and filled that gap, or if it tried and got some resistance at the cloud and then turned down, and by that time, the indicator would probably be going red. So this shows me momentum and trend direction. It is not a yes or no filter for me. Okay, I'll do one pair here, Euro USD. Let me see if I can remember how to do it in TradeStation. There we go. Euro USD. I don't trade Forex, but I can analyze a pattern. So here's wave 3, big impulsive move up. Wave 4, a little shallow, but met the criteria. We got a target on it up between 1.25 and 1.318. It is hitting some resistance. I would wait and make sure it could take out this high and then maybe take it a little higher up in here. Your stop would be right here under this last low. There you go, Walla. Wow, we've eaten up a lot of time. And so I want to go ahead and start winding it down. So if you like what's going on here and you'd like to follow along with me, yeah, of course I got a offer for you. So just to recap where we're at, these 3 things are essential to be consistently profitable in your trading. Great trade setups, got to have a high probability outcome, got to have a great reward to risk ratio going into it. You have to manage risk, control the downside, and you have to manage the trade. Anybody agree with those things? Go ahead and just click the raise your hand button if you agree. Those things make sense, right? To in having consistently profitable trading, right? So anybody excited about what we covered here? Maybe excited about the trades we just looked at? There's a potential. We got Avgo, Trip, Tesla, Microsoft, and the gold trade that I showed you, and there's several more coming still. Maybe you feel like this guy right here is like, wow, that was a ton of information, not sure what to do with it. Let me spend just a few minutes and I'll talk about an offer where you can follow along with me in my trading, right? You know, again, this is what I'm providing: great trade setup, risk management, trade management, right? To get that, if you were to get that kind of on a one-on-one basis, right? First, my picks are winning an average of $1,900 a month on a $100,000 account, and we're producing a 25 to 30% return year after year after year. Each each month you get 4 hours of detailed trade consultation because I have a live chat session. You get a one-on-one consultation with me, and you get ongoing education as part of the process. If you were to pay for those things individually from me or the provider, that's going to cost you, $5,000 or something. But I'm going to offer all these things to you. It's not going to cost you $5,000. You can sign up for an offer to try my stock and option picks for 30 days for $37, and it's going to be $97 a month after that, which is a discount from the list price. So let me get you a link. Put it in the chat box here. There you go. IAM says, great discussion. What size of account do you need? Most stocks I reviewed are quite expensive. We take picks on a variety of stocks and prices. So, a trade we're looking at right now, waiting for it to hit, is MUX. I like low price stocks. I make sure they have good volume, but MUX, we're going to take an entry at 256, so that's pretty cheap. But it trades at over 5 million shares per day, so it's got plenty of liquidity. That's an example. But it's not all large stocks. I got a mixture there. Yeah, you're welcome. 10K account, Anthony, that's kind of a minimum, right? In order to cover the, if you go into it with a 10K account, well, my real goal is to learn and to get proficient, to grow my account a little bit. That's fine. If you're looking for, meaningful returns on your 10K account, the subscription fee is going to eat into that a little bit. So that'll be kind of the minimum. Okay. With the stock and option pick service, so I send out, on average, we took about 60 trades a year. So that's just over one trade per week. I send out a pick. I send it via email. I post it on the website. I send a SMS text alert. If you want that, you can opt into that. Every week, we have on Wednesday evenings a live chat session where we review the current trades and answer any questions. On the weekend, I do a full recap, record a video, update everything, send out any updates real time during the week, email and text alert. And when you sign up, you get a free one-on-one phone consultation with me so we can answer any questions. I can make sure you understand how to process the signals I'm sending. So click on the link in the box there to check it out. And or you can, if you're on a phone, or that's easier, you can text trial to 360-310-4171. All right. There is the link again. Can I show my website again? Sure. It's followmetrades.com. I'll go ahead and type that in. Is there a list of what issues are offered? Not sure I understand, Judy. Last year, how did the service do of the 60 trades? Well, it's right here, complete transparency. On the home page, go to 2017 trade details, right? Took 60 trades. We ended up with a profit. We had a payout ratio of 2 to 1. So our winners were 2.1 times bigger than our losers. We ended up, on a $100,000 account making 24 grand, or whatever account size, it's 24.33% profit last year. And there's a list of every single trade that we took. Ranganathan, it'll take you a week to fund your account. Can you start after it's done? Go ahead and sign up today and send me an email, and I will I'll push out your renewal a week. Okay, but go ahead and take advantage of it now. Chris, we're taking mostly, he's asking how fast would his actions have to be. We're taking trades primarily in the pick service on daily charts, right? It's not day trading. It's not like you have to do it right now. Every once in a while, something will take off, but for the most part, you've got time. You can, place orders after the market's closed for the next open. I give you a range, and I give you tools to determine whether it still makes sense to take new entries. So Anthony's day trader to 60 trades in 3 days. Your broker loves you, huh? Yes, Judy. Again, about just over 1 new trade per week. So last year we did 60 trades. So that's just over 1 a week. Let's see, in 2016, we did how many trades? 68. So, you know, call it 1 to 1.5 trades per week on average. So, you know, people often ask me, how much time will this take? Once you understand, you know, the information I'm sending out, how to act on it, there's no reason you should spend more than an hour a week processing trades. What time of day do I send out alerts? You know, kind of as they happen, Ahmad, it's Wednesday evening. Not sure what time zone you're in. I do record the sessions, the weekly live chat sessions. I record them and post them just like I'm doing with this. So if you're not able to attend, a few hours after the session, you can go log in and hear it. And you can always send me questions, right? What is my email address? There it is, dean@followmetrades.com. So Judy, the Wednesday, you know, so there's a Wednesday live chat but on the weekend, I do a full recap and update all the trades. Whenever we get a new setup, you know, what other new webinar, what's involved? Great winning trades. That's really what's involved. That's the core of the offering. But on the weekends, I do a recap, send out a video and an update on all the picks. Through the week, if there's a change, I send that. Wednesday nights, there's a live chat session where we review the market, the trades, answer questions, and you can schedule a one-on-one consultation with me and answer any questions you have. So that's what's all involved. You are welcome. And there's the link again. Well, hey, I'm going to wrap it up, but thank you so much for being here. You guys are awesome. I appreciate you taking the time and be here with me on a Saturday morning. There was other places you could have been. I hope you found it useful. Hope you found it interesting and relevant for you. All right, I'm going to go ahead and turn my camera off, go on mute, but I'm available. If you have questions about the offer, if you're having any kind of trouble getting signed up, I'll jump in and try and help you out. Thank you, Lee, Perry, Robert. Options course, you can go check it out on my website. Yeah, this presentation wasn't really meant to do that. But if you go to my webpage, Robert, since you asked, right, you look under the products, and here's the options course, and you can go check that out and read all about it, and by all means, sign up. Great. Don't lose hope, summer is coming. That's right. Okay, great, Rob. Yeah. Jeff, can you pay for a year? Yes. If you sign up for the trial, right as you sign up, the next screen is going to offer you an amazing discount for a year. So you can go ahead and do that and check it out. The link to sign up is right here. You see that, that link, Daniel? How much for a year? It's an amazing discount. It is $647 for a full year, and it includes the live trading room. So if you go sign up for the $37 offer, you're going to be presented with that, and that's a introductory price for new customers. That price won't be found anywhere else on my website. It's a really, really good deal. Again, intended for new customers to really get you acquainted with me and my services. All right, I'm going to hang out, answer any more questions that come up about the offer, about the service, placing orders, all that kind of stuff. Again, have a great day. Trade safe. Use risk control. Keep your winners big, your losers small. Thanks.
Hey, Alex, I see your question about can you do 2 months instead of 1 month? Unfortunately, that's just not set up. But you can take it for a month. It's got a 30-day guarantee, 30-day money back guarantee. And, you can take the trial for the first month. You can let it renew and check out the second month. It's up to you, but I don't have a 2-month offer structured.